Hello guys, good evening. Today we are going to talk about yet another uh, topic, and today's topic is about the basics of investing. So this is not just the basics of stock market investing, but this is uh, in general what is investing, the difference between saving and investing, and what are the different available means or different available instruments where we can invest, or a person who is just starting to invest, or who has just started earning, what are the options available for him to actually grow his income. Okay, so what we'll do is we'll first talk about few things with the help of an example. So say suppose it is your first salary and you earned 100 rupees. Okay, and now this is your monthly salary, 100 rupees. So how are you going to divide it? Okay, so this is the total income which you have monthly, and what are the different expenses on savings and investment? What are the different things which we can do using this income? So first thing is that was the income 100 rupees, and there would be certain fixed monthly expenses. So say suppose your fixed monthly expenses are uh, or you have to basically make it a point that whatever is your income, your expenses should ideally be not exceeding 50 to 60% of your total income, monthly income. Okay, so let us take an conservative example here, wherein you are able to save half of the income which you have earned. That means your income is 100 and your expenses, monthly expenses, fixed expenses are 50. Now, out of the 50 which are left, you can now choose how you want to go ahead with this 50 rupees. You can either put it in FD, RD, or you can buy gold. You can also try to see if you can collect some money so that later on you can invest in real estate. Or means, yeah. So here comes the instruments. So what are the different available options for investors? And say suppose let's take an example of middle class people or retail investors. So the basic options which they have is they can invest in FD, bank FDs, bank RDs, or they can choose to invest in schemes like PPF, NSC, okay, these things, or some other plans. So there are also some ULIP plans, so you can go for those also. And you can also buy gold, or uh, you can also put it in your family business if you have contribute to it. Okay, so these are the different general avenues in which or the general asset instruments which we have apart from stock market. Then the final thing which comes is you can also put your 50 rupees into stock markets. Okay, and to invest in stock markets, again there are various mediums to do it. You can make use of something called as small case funds. You can make use of mutual funds, or you can directly uh, direct purchase of stocks. These are the options if you want to go into stock market. Now even before we decide to uh, put our as money, 50 rupees which we have left into any of these, we also have to understand two more things. So there is something called as savings, and there is something called as investing. Okay, so savings is different than investing. Savings is something which you know that you might require at any point in time. Okay, and this is like what our parents have traditionally done. Okay, they have always tried to save some part of the income, and out of this again they can do charity and other things like that. But this is something which every Indian family is used to, savings, this concept of saving. So say suppose out of the 50 rupees, what you do is you save 15 rupees and put it in your savings basket. Then now the left amount is how much? 25 rupees. Okay. So now if you want to invest this, so by investing what we mean to say is this is the surplus fund which you would not require at least from 5 years from now or 10 years from now. So this is the surplus that you have, and this is like only if you're planning for your long term goals. So that is when you invest in uh, that is when you do investing. That means you have to park your surplus money into some avenues or some asset instruments which can give you healthy returns to fulfill a given long term goal. Okay. Now coming to this investing, there are, as I said, there are different ways in which we can do investing. Now, and there are different asset instruments as we already discussed about. Now, what out of all these asset instruments are all these instruments suitable for investing, or all these investments suitable for savings? So there is no such fixed answer for that, but generally what we categorize is, in when we talk about savings, we put some in FD, some in RD. Okay. And we also buy gold sometimes. Okay. And yeah, that's it. And when we talk about investing, so in investing what we do is, for long term we normally buy like PPF, NSC. If you have a daughter, then you can also avail things like Sukanya Samruddhi scheme and things like that. And also if you are old, then you can also make use of certain retirement schemes in which you can invest, okay, for investing purposes. Now the good thing about these schemes, and also there are other things I have missed, but NPS and superannuation, which your company does have provision. And of course, anyways, in savings you also have one more thing. If you are on payroll, then you also have the PPF option. Okay. And PF option, sorry, not PPF, PF option. So these all things are there. Now the thing is, of all the investing instruments which we have taken here, so these are kind of like, more or less like guaranteed returns, and the rate of interest, or the profit, or the capital gain that you get on top of these is little less. Okay. And over a period of time, when we take into account the inflation rate, so what 100 rupee can buy today versus what 100 rupees can buy after 20 years from now, if we take into account inflation rate, so it makes a huge lot of difference if your asset instrument is significantly giving better returns as compared to the existing one. Okay. That is why many people get influenced and they move or they explore the concept of stock markets. Okay. So now let's talk about stock markets, but before that let's just revise whatever we have seen. So main thing is, whatever is your income, which is 100 rupees, you should try to make sure that your expenses uh, should not exceed more than 50 to 60% of your monthly income, and your saving should be at least 15% of your monthly income. And when you talk about investing, so your investing can be 20 to 25%. Okay. And now actually what happens is, why we say this as 20 to 25% is, the 5% which we are talking about, the differential here, okay, between 20 to 25, we keep it for building an emergency corpus. Okay. This can be utilized, and this particular emergency corpus, initially we take it as 5% of monthly income, and this is over a period of time, this should basically be at least equal to 6 months of your 6 months of your salary. Okay. At least equal to. And once you achieve this, then also you should continue to park this 5%. Okay. So after emergency corpus is built, then you can park this into some debt funds. So we'll talk anyways about debt fund, equity funds, and things like that. But for simplicity, you can even put it in your bank account. Okay. So this can be used for emergency purpose in case the emergency corpus is not enough. Okay. And many other things are there. Sometimes you want to do charity. Sometimes some unexpected expenses comes up. So what we can do is, after emergency corpus is filled, then later on we can also make use of this 5% in miscellaneous things, or miscellaneous expenses, to be precise. Okay, we can save it. Now let's come to the final thing. So now we have seen that how 100 rupees is divided into expenses, saving and investing, and also some miscellaneous expenses after building the emergency corpus. And now when we talk about stock markets, though, so the main reason why people would want to come to stock market is liquidity, high returns, and yeah, so these are the main things. Okay, so what will happen is, let us give an example, simple example. So say suppose some situation so happens that you lose your job. Okay, or someone gets ill in your family. So at that point in time, what happens is, if you have parked your money inside fixed things like, say suppose FD, then you will have to pay a penalty if your maturity date is not over. If you have parked it into real estate, so the problem is you cannot directly liquidate it and go about it. If you have parked it into long term routines like PPF and SC or Sukanya Samri, the same things, unless you have crossed at least the partial maturity or the full maturity period, you incur a penalty if you try to withdraw those. Okay, so those they lack the liquidity aspect. The other thing is, even if you invest in gold, you invest in real estate, you invest in PPF and SC, even in that case, what happens is there are a lot of complications, and at least in real estate, and the returns which you get over a period of time uh, are less if you compare it with the returns from stock markets. Okay, if invested in right stocks, and if the exit and entry strategy is right. Okay, and in order to invest into stock markets, there are various options available for the investors. So let us talk about a few options. The first option, or the one which is widely used nowadays, is mutual funds. You might have heard that saying, right? Mutual funds sahi hai. So I am not going to say it's sahi or wrong, but yeah, nowadays everyone is aware about it. So this is one of the ways to enter into stock markets. The other one is, you can also make use of something called as small case funds, or let us call it just a small case. So small case is like, there are different mutual funds. So similarly, small case is a company which provides different funds which allows you to directly own stocks from respective companies. I will anyways create a video later on highlighting the differences, advantages, disadvantages of small case versus mutual fund, and which might be better for the investors in certain scenarios. But let's save it for later part. We are just talking what are the different avenues to invest as of now, to keep it short. And the third one is, you directly use a broker account like Zerodha or Angel Broking or Sharekhan, anything like that, and you use that broker account to directly purchase and sell stocks, company stocks, from NSE and BSE website.